If you're a uranium investor, if you're interested in uranium stocks, I do not recommend that you buy into the URA, also known as the Uranium ETF. This is why. Hey, this is Fabi from The Next Big Rush, where we talk about growing your wealth through smart investing. If that's something you'd like, then hit the subscribe button right here below and the bell right next to it so that you don't miss any of my future videos. If you just subscribe, you might miss it. So sorry in advance if you don't do it. Okay, so why is it that I'm bringing up the URA, the famous uranium ETF, as an investment vehicle, and why I don't exactly recommend it to people who are trying to capitalize on the, shall I say, beginning, on the start of this, hopefully, fingers crossed and knock on wood, uranium bull market. Now, let's get into the nitty-gritty. You guys have been great in talking about uranium, talking about the stocks that you like, that you don't like here in the comment section. Thank you for that. But some of you have actually brought up URA as an investment vehicle for the uranium sector. Now, URA is an ETF that has been around, I believe, since 2010. They were able to grab that 2011 bull market, or I can say, you know, partial bull market, then collapsed completely with the whole industry and has been going down, down, down. I believe it's down, I don't know, 80–90% from its highs. Now, the reason that people would invest in an ETF, I believe, is when you buy into the story, you buy into the thesis of whatever, in this case, uranium, and you don't want to actually go through the trouble of, you know, finding out who the top developers are, who are really the best, most efficient producers, where does the risk lie, you know, who has debt on their balance sheet, you know, what explorers are more likely to actually find something of value. And so you don't want to get your hands dirty, so you buy an ETF to represent this investment vehicle, this asset. Let's call it just uranium for now. The issue with URA is that it used to be more reflective of uranium mining. However, since the 1st of May of this year, it has become more and more blended with the nuclear industry and not just the uranium mining industry. What do I mean by that? They were actually tracking mostly uranium miners and uranium as a commodity. So Uranium Participation Corp was a huge holding of theirs, Cameco, NextGen, Fission, and all of the other investment, the large or larger caps in this industry that you are probably already familiar with. What they have been doing since the second quarter, or since, I guess, second and third quarter, is to sell a lot of those positions and to actually get into nuclear-based investments, such as engineering firms, and not just the companies that are involved in building nuclear plants, but also that provide services and products to the nuclear industry itself. So, you used to have a lot more holdings of UR Energy, of UEC, of Energy Fuels, 3 of those companies in the US, about to possibly gain a lot of momentum if petition 232 is approved and the quota is recommended, and they are actually selling it as we speak. I believe that they are done selling most of these positions, and they're not going to capture any upside from here compared to what they would have had they stayed in the uranium mining sector. And so they're rebalancing, selling a lot of the companies that I believe have a lot of potential. And so if your thesis is more towards the high leverage, the high risk, the let's capitalize on the US as a possible investment short to midterm in uranium, and then let's look at the Athabasca Basin, you're not going to get that with URA. So if you're thinking of the miners, go out and buy the miners. If you're thinking of just the nuclear story as a whole for many years to come, then yes, URA might be a good idea. In fact, I actually wrote down here a few of the engineering firms that they've added to the list, or that they have bought more of, and some interesting names come up, such as Samsung C&T Corporation. That has a dividend of 1.6%, better than nothing, especially when it comes to uranium. They have Hyundai Engineering, GS Engineering and Construction. So, you know, decent companies. If you look at their charts, they have been killed as well, but they are a completely different beast to the actual miners. With the miners, if there's a shift with the prices of the commodity, that's what I'm betting on, then they have the better position to gain the most appreciation in price in their stock. So in short, URA, go carefully, go and look at their website, see what holdings they have, and see if you would be willing to invest in those companies. If you're an all miner kind of thinker or kind of investor, then I would just do my homework on the holdings that they used to have. Take a look at those, see if you like them as an investment, and go and buy those instead. Now, I have a very high risk profile. If you want to see a video of a company that I made earlier, up here, just click on this link. It's a US based company, not sponsoring the channel, but very high risk, very high reward. I'm already up almost 100% on my investment. But if this becomes a real producer, I can't even fathom where the price is going to be. Very high risk, nothing is set in stone yet, but it's just an example of what you can capture when the bull market is fully on. So that's it. If you like this video, hit like and subscribe, because there's a lot more coming your way. Let me know in the comments section, do you own URA? Would you recommend somebody else to own URA? Yes or no? And why not? All right, thank you very much. Take care. See you in the next video. Bye bye.